Hello and welcome to Pro Trader Strategies Market Commentary for Friday, January the 25th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I am here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. Nothing really to see here today. Not a whole lot of economic data here in the United States, but one thing that we missed yesterday, because I've been doing these daily market commentaries a little bit earlier in the morning because I have jury duty, trying to get some information out to you guys before I go off to do that. I missed the natural gas and crude oil inventories numbers. So natural gas came in at a drawdown of 163 billion cubic feet, a bigger drawdown than expected, which was 145 billion cubic feet. But we did have those big major storms across the United States, almost blanketing the entire United States. Colder weather and things could be driving that natural gas deficit, as people are using that to heat their homes in the winter, right? But one thing we did note with crude oil inventories was a massive build. 8 million barrel build, expected to be a drawdown of 0.2 million barrels. So over an 8 million barrel miss to the upside on this inventories, which should cause crude oil to come off, right? As we see supply increase, demand waning, price should come off. And we're not really seeing that right now. Yesterday, actually, it continued to rally after seeing that massive build, which is a bit of a conundrum to me. Sometimes it does take a couple of days for that to kind of filter into the market. That being said, I think that crude oil is a little over frothy up here. It should be closer to the mid 50s almost. So, and maybe even testing that 40 handle again with that much of a build. It just seems like with the economic data we've been seeing, there's not great manufacturing robustness, and a lot of this crude oil will go into that manufacturing process once they break it down into different types of gas, all the way from propylene to jet fuel, all of those ancillaries from the crude oil going into the manufacturing. If we see that demand wane there, that's where we're going to start seeing some of that build. And that's it. Nothing other than that. We missed yesterday. Crude oil continuing to move higher today by about 25 cents. Probably going to get a lot of resistance, but I'm a little bit, I was looking at this yesterday, and it's almost looking like a bit of an upside down head and shoulders, which would expect the technical analysis to go up and test these Fibonacci levels and the value area low. But we all have the fundamentals where we've got these huge builds, and that should cause it to come down. So it's a wait and see game right now. Who's going to win, the fundamentals or the technicals? And right now, the technicals are winning, because we're pushing higher with that much of a build. It just doesn't make sense. Gold, another one. All of these markets just kind of drive me a little bit crazy. I haven't been able to watch them throughout the day to really see, but when you take the snapshots of it, equities are moving higher. Gold should not be pushing higher with that. It's wanting to go up there and get into that 13 handle, which just seems a little bit overdone to the upside at this point. I don't think that we're seeing recessionary aspects or inflationary aspects that would drive gold higher. So gold pushing this much higher by almost $20 or $15 at this point, $13 on the day, $14 on the day. That just seems like a little bit bizarre with the equities showing some strength. Here we go with the Dow Jones Industrial Average, slightly negative on the day, this is the bond, slightly negative on the day, by about a half a point, almost giving up yesterday's gains. This is kind of what we would start to expect if we're seeing equities move higher. The VIX coming off, which should indicate equities are strengthening. You can see this with the Dow Jones Industrial Average up quite a bit, right to the point of control, but more so trying to extend over this Fibonacci extension. So I think that's going to be a lot of overhead supply, and it might not act as much of a support and resistance as one would normally see with Fibonacci, because it's lining up very closely to this value area where the point of control is, where the most time and volume has been spent. All of those things being said, if it pops above there and below, it may look like it's acting as a support and resistance, but to me, it's going to be that it's settling down in and around the point of control. All right, NASDAQ up on the day as well, quite nicely by almost 100 points. It's ripping right through its resistance, overhead resistance areas, but that is because I think it's migrating back towards the point of control. In the previous slide, we saw that the point of control was right lockstep with these Fibonacci's. This is a little bit, has the point of control a little bit higher as well with the E-mini S&Ps. Up on the day, but finding that overhead resistance coming in with these Fibonacci levels. If we pop above that, it's straight to the point of control. So that's what it seems like it's trying to get to. I thought we might see a little bit more of a correction on this little drop, but you know, there's strength, that late day strength I've been talking so much about in the equities was a sign of bullishness going forward. And today they're coming out in full strength right now to try and defend that bullish sentiment by pushing up. If it can get above these Fibonacci levels, that would be a big coup for the bulls. All right, and let's go to the daily chart, the breakdown. Each section is a daily chart or daily section. You know, you can see that each candle is a 30-minute section of time. And as you can see, we have almost just rallied unabated to the upside since the open. So very strong coming into today as people are putting trades on for the weekend. That's a good strength signal. When they're putting on positions rather than taking them off ahead of a weekend, that is a good sign. And I think we're seeing that continue today. One of the things that I've been trying to do is get out of my IWM. Obviously, with today's move, it isn't close. Yesterday, I was kind of close. I was about a dime away. I thought we might get a bit of a pullback, and I would be able to get out of those. So I left that in as a working order yesterday and did not get filled. So today I've got another working order in, but it's a lot further away. I don't expect to get filled. May have to wait till next week, most likely, because I'm not going to chase it. And that's about it. Just looking to cover that one trade. I went through a bunch of stocks this morning looking for trades that I could put on that didn't really have earnings in and around them. I wanted to do some premium selling strategies, especially with volatility coming out and the market's rallying. That is a good time to do that. But I can't find anything with decent volatility that does not have an earnings in this earnings cycle, or sorry, in this expiration cycle. So I'm going to probably have to hold off and pick and choose when I'm able to do these, because I don't like to put on these earnings trades early in the mornings. I like to put those on late in the afternoon. This early in the morning to put on an earnings trade just is a little bit too much risk for that one type of trade. So I like to hold off on those till the end of the day. But that being said, I am out of pocket almost the better part of the day, making it very difficult for me to try and do something like that. But I might get a little bit more aggressive next week and bring it like a computer and maybe try and throw something on there while I'm at lunch or something. And that's about it. Other than, I hope you guys have a great weekend and wish me luck at jury duty. If you can't take that, take it easy.